Hello, welcome everybody. SF Live episode 232, and I'm joined by my good friend Patrick Kareem. I haven't talked to him in a while here on SF Live, but I'm excited to have him back because I think it's quite timely. We're seeing a divergence of stocks going down, gold price going up, and he made a very bold. Was it a call, Patrick? But you posted a chart that included a number that had me like they had a lot of question marks painted on my forehead. It was an $8,100 gold call. Yeah, you hold on.
Right now.
You're still muted. People can't see you and hear.
Uh,
Like now they can hear you at least.
okay.
But you did that, and I'm going to get to the bottom of this. What does it mean? Is it even realistic? Like in what time frame are we talking about? Of course, and all the good stuff. We're also going to touch on silver. You recently commented on oil and other commodities as well. Let's see where we headed and how inflation factors, of course, into all of this. But before we get started, real quick reminder: follow us on YouTube, follow us on Twitter, hit the like and subscribe button as well. We do all our interviews live, as if you've just noticed. There's no editing, there's no filtering. It's all straight from the CEOs, from our guests, straight from their mouth to your ears. And can't wait to hear now what Patrick has to say. And let me switch over. And Patrick, welcome to the program. It's good to see you. Thanks for joining us again. It's been too long.
Hi, man. It's always I'm super impressed with the professionalism of your setup there. It's like I wish you the best of luck because you definitely put in the hard work there. It's really impressive. And yeah, that I just deleted that
Oh, you,
8,100 forecast for gold. It's gone. What are you trying to put me on the spot? What are you doing?
you got to follow through now. You got to follow through. It's out
Yeah,
there now.
well,
You know, it's in the archives. The
yeah.
internet doesn't forget, right? So let's jump right in. I got the Kitco chart of gold open here right now, 1849.70. It looks like gold wants to break out.
Yeah.
Tell us a bit about the environment of gold, and we're going to get to the $8,100 call. But where are we right now, actually?
Well, man. So gold. It kind of sniffs out or it tracks very like every time somebody's saying, oh, gold tracks real rates, gold tracks inflation. Oh no, gold reacts to US dollar. And and then there's a whole bunch of elements. And if you put any one of those charts with the gold chart, they're not perfect. Like somebody could point, well, look at that section. It didn't track very well. But there's one chart that I found that gold tracks, and let's on the quarterly candles. And since 1971, gold tracks very well the inflation adjusted US dollar. Or for that matter, I did the exercise for any currency adjusted for their inflation. So let's say the Great British Pound adjusted for their inflation. Gold expressed in their currency tracks that very well. And that's what gold did when it broke out in like 2019 out of that six-year base. It broke out. It was front running by about maybe 3, 6 months, 9 months, what's actually happening now to the US dollar. So it's not just the US dollar going down. The US dollar could stay flat or even go up. But if there's more inflation, then when you measure the US dollar inflation and you inverse that chart, then gold, man, it tracks it to perfection. And what's been happening right now is gold overshot, let's say to 2000, it's correcting. It corrected back to 1675. That's yearly defined breakout levels. Beautiful bull flag above a critical breakout line, and it let catch up the inflation. Like there was no talk about 6-7% inflation back in 2019, right? But gold still like rushed all the way up. And now when you look at the US dollar adjusted for inflation, it finally caught up. So the pattern for US dollar inflation adjusted, there's a beautiful trend line right where it is, where it could break out to the upside. So that means the US dollar either goes down, inflation stays flat, US dollar stays flat or goes up, but there's even more inflation. And gold right now, if it breaks out, it's probably going to be front run its anticipation of what's going to happen next with the US dollar inflation adjusted. And just if I could close up on that, you got to see the inflation adjusted US dollar as your purchasing power. You've often seen that chart. It's like the flag or it's like a US dollar, and they just show like your purchasing power going down and down and down. Well, actually what that chart is the US dollar divided by inflation.
Interesting. Okay.
Yeah.
And inflation is a big factor as well. Like, how does it factor into your charts? Because you do a lot of ratios as well. Like, what shows like Gold US dollar, you talked inflation US dollar. We briefly talked gold miners before we went live as well. I said, well, the miners are shit. I was like, I don't want to deal with them. Like, that's just terrible stuff. But like, how does that factor in? Like 7% inflation, we're seeing it. Gold is up, gold miners are down pretty much. Is that because of inflation? We see cost overruns left, right, and center, and people just don't want to jump into the stocks right now?
Well, okay. So for gold, we know that the US dollar inflation adjusted is its drivers. For the miners, if I don't know what's driving them, so like maybe your fundamental guys that you interview, they know, okay, higher inflation, whatever, like input costs, and then the miners, the margins, all that I know nothing about. But I do know that once gold starts outperforming the U.S. equities, so that's a ratio chart. So let's say you do a Nasdaq, because that's the poster boy for U.S. equities. When it starts underperforming, let's say on the monthly chart, the gold, so that ratio chart really starts turning back down, then capital flows are going into gold. That's step one. So that's already happening for gold or silver. They're already outperforming the Russell. The Russell on the meaningful long term, it's already breaking down versus precious metals. SPX, borderline, Nasdaq, it's just starting. On the daily chart, we already see that there's a topping formation where the Nasdaq's actually breaking down. But on the higher time frames, it's not quite breaking down versus gold yet. Step one. Step two, you want the miners to start outperforming gold, and that's not happening. So I did a chart of the Huey, which represents the gold miners index. And if you do a ratio of that versus gold, it's rock bottom. It sucks. It's like we're back at 1996 levels. But that's the beauty of a ratio chart. So ratio chart normally goes up and down. When a ratio is at the bottom, so let's say the miners are really getting crushed when expressed in gold, that's actually time you should start thinking about accumulating. You don't want to accumulate too early, so you really want to start seeing a sign of life of that ratio starting to turn up, because you want to be, there's opportunity cost, right? And that chart, if I go from memory, I'm pretty sure it's already starting to turn up. So the Huey starting the gold's refusing to really severely outperform the miners. And once that breaks out, there's breakout levels, but they're not quite there yet for the Huey versus the gold chart. Once that breaks out to the upside, that's when we're going to see multiple times. So gold's going to go up one, but the miners are going to go up 2-3 times. And these are big cap stocks, the one in the Huey. So I can't even imagine. So if people are like in explorers or in these nano cap stocks where I have like market caps of 10, 20 million, those I think in a bull market, when commodities, when capital is going really into the precious metal sectors, I don't think anybody's going to blink an eye when a stock goes from a market cap of 10 million to 50. But for you, it's a 5-bagger. But for the market, just that money slushing in, they're pretty much all going to go up. Even the ones with no mining permits.
You got to beware of those. You got to beware of those. There are a lot of dodgy ones out there as well. But usually the rising tide lifts all boats, right?
Yeah.
So I got a bit distracted with the inflation debate here, because I think it's an important factor and something we've been discussing here in the office as well. How rising costs are keeping gold miners back. But I want to talk gold price again. Like, let's come back to the $8,100 you called. Let's get into some details there. Like, what made you make that call and put that number on the chart, and what time frame are we talking about?
All right. So in chart trading, you could have measured moves in linear. So I call those the non-greedy. So on the linear scale, guys, it's that each inch is like $100, right? But stuff that's denominated, let's say in fiat currencies that are like exponentially getting debased, usually you'll see moves like gold used to be like $30, $50, then it was 300, right? So we added a zero. So in order of magnitudes, gold is moving logarithmically, right? And now it's like in the thousands, it's in the 4 digits. So you add another zero. So when you have instruments that are moving logarithmically, and especially when you zoom out, the linear measure move. So let's say the linear measure move for gold, it would be let's say the 2000 lows. I forget where we're, like 250 all the way to the 2011 highs, where they're close to 2000. So you take that. So that's probably like 1800 or 1700, and you add that to a breakout line. So let's say we break out above 1900 or 1800. Let's say 1900. You would add that 1800 on top of that number, and that would be your linear measured move. So that should bring us to 3100, 3400. We've seen these targets go around. That's probably TA guys doing the linear non-greedy measure move. But what I've seen is, and gold, It's previously done this in the past, especially also in the 70s where it had that first bull run, and then it had a pause in the mid 70s to do the second run up to, it moved logarithmically. So it wasn't just moving from $30-$40 to, I don't know where it went, 400 added on top. It actually went in percentage move, it moved the same amount. And if you take that percentage move from that, let's say that 2001 bottom or 2003 bottom for gold all the way to 2011, it's about a 340% move or something like that. If we think that gold's going to move in percentage wise the same way it did from that bottom, those 3 digits to those 4 digits, then from 1900 and you add a 350% move, it brings us to 8100. So that's like the first step again. Okay, so that's my greedy measured move. Fine, if it's able to reproduce a logarithmic move, which it's done in the past and other instruments have done in the past. How much, in what time frame? Because that's the second question people want to know, right? They want to buy options. Patrick, 8100, but what? And then they make the jokes like in 100 years. I've been a victim of all that trolling. But seriously, there's another concept in TA. It's called fractals and analog moves and angle of ascent. So in a pull flag formation, let's say I went up at a 60 degree angle, then I consolidated. And then when I break out, usually it'll be the same angle, that same energy that went in the pattern. When it consolidates, as soon as it breaks out, it's going to be pretty much the same angle of exit. And you can see that in a ton of charts. So I took that same angle, that same distance, logarithmically, I put it to where we would break out. And that brings me to about in 2027, maybe late December 2026. Guys, it's like, it's not rocket science. Like it could be months before, months after. So that 8100, and it could overshoot on smaller time frames, it's at this stage, as long as gold stays above its 3-year moving average, it's a reasonable target. That why not? It's like, this is stuff has reproduced in many charts that had the same fractal, the same setup. And so like we're in 2022, man, that's going to be an insane move. So in 5 years, gold could go up to 8,100. And I don't know why people freak out. They think it's a big target because it looks at 8,100, but geez, how many stocks they went like baggers, like 10, 20 baggers? Nobody blinks an eye. Tesla could go up tenfold. No problem. But gold go up 3-4 fold in 6 years. It's like, oh no, man, that's like, that can't happen. It's like, I don't get it. It's just a number, man. They're printing, like, I don't want to go narrative-wise going up, but they're just adding zeros. It's like gold's always going to stay the same, right? It's a brick of gold. And look at the gold express in Turkish lira, gold express in the Canadian dollars. Man, all these charts, they're forecasting what's going to happen for the US dollar.
Yeah. Interesting. It's just, there's so many factors going into the gold price, right? And everybody calls it a hedge against what's going on in the world, against inflation, a weaker US dollar, although that's not the case. The US dollar is extremely strong right now, to everybody's surprise, to be quite honest. And but we're seeing Bitcoin declining right now. Talking about hedge, and a lot of people brought up hedges and Bitcoin. Oh, it's the next store of value. And I've seen you put out a couple of charts on Bitcoin. Gold going to $8,100, Bitcoin crashing to zero. What's your impression on that? And like, no, that's but like that was me being like trying to poke the bear and see what comes out there, Patrick. What's your impression on that, and what's driving Bitcoin prices lower right now, and where's the pressure coming from?
Okay, so Bitcoin's tricky. Bitcoin has been in existence since 2011, and that was exactly when gold peaked versus US equities. So it was kind of born like, as a chart trader, I need to see data. I need to see long-term cycles. But right now, I did a chart of gold, the NASDAQ expressed in gold. So NASDAQ versus gold ratio. And then I did a Bitcoin versus expressed in gold. So Bitcoin expressed in the gold ratio. And I even did with silver or any other commodities. And Jesus, man, Bitcoin is, it has some, it's like a leverage play on the NASDAQ. It goes up like in percentage, but those ratios, they track very, very nicely. So right now, what the capital flows that are going to the NASDAQ, either disinflation, lower rates, all that money sloshing into the NASDAQ since 2011, it's seeping at creating the same type of ratio or graph versus of Bitcoin. So, and I just did this one this morning. I said, okay, I'll fine tune it. I'll compare Bitcoin to the tech and software sector index. And when you zoom out on the semestral candle chart and you put correlation coefficient, it's like 80%. It's look, it's the same. And I did it. I even zoomed in on the daily chart of those racial charts I just said. So NASDAQ broke, Bitcoin broke down versus silver, Jesus, like a little while back. And now front-led NASDAQ breaking down versus silver a little later. So they kind of drift, right? But the behavior is the same. Money coming out of the NASDAQ is money coming out of the cryptos. And if the inverse happens and the NASDAQ decides to melt up, the cryptos are probably going to have another run up. It's not a commodity. It hasn't, like I put a tweet out, like show me guys one commodity chart, oil, soy, anything that has behaved the same way as Bitcoin did since 2011. They haven't, because it's not the same capital flows pushing that asset up. So for me, it's until it's able to behave the same way as gold versus the NASDAQ. So let's say you do the NASDAQ divided, and they both have the same type of ratio. It's going to suffer. So if the U.S. equities go sideways for 10 years, I'm pretty sure Bitcoin's it's just going to go sideways for the same amount of time there, for sure.
Yeah, so you are saying actually there's a massive correlation between the tech sector and Bitcoin. So if we do see another bubble burst in tech, because looking at some of the valuations, it's bound to happen, or it has to happen. You come back to somewhat realistic levels, you see Bitcoin dropping as well. And do you see some of the Bitcoin money flowing into gold or precious metals, including silver right now? Are you tracking those flow funds? Do you see that happening? Do you see some of your indicators jump up?
Yeah, well, just the previous choice I just mentioned, just the fact that Bitcoin, if you divide anything by anything, you could say, well, the capital flows are going to the other asset class, and Bitcoin's underperforming silver, for crying out loud. So it's underperforming gold, it's underperforming silver. The money's flowing into precious metals. I could put the oil chart, copper chart, the capital, the changes. It's hard because on the smart time frames, you could have capital flows leaving, let's say, cryptos or the NASDAQ going into precious metals. But then after that, there's going to be a rally in cryptos. But if you take a zoom out, eventually those daily charts become weekly charts, and we'll come back to monthly charts. When on the monthly chart, those racial charts really start turning, it's not a momentum that's easily overturned. And if you look in the past, whenever, let's say the SPX, because we have more data than the NASDAQ, once it started underperforming gold or silver, it takes 7, 8, 9, 10 years for that cycle to end. And I think we're super early. Honestly, gold kind of not cheated us, but by breaking out in June of 2019, like we thought it was gold time there, but Jesus, that was just the momentum buildup, just that run from 1100, 2015 lows to all the 2000. I believe that's just the warm-up back, just like gold from 250 in 99 or 2000 that went up to 300 or 400, and then it consolidated above that breakout line. That for me is just a warm-up, just to build that momentum. It's there's a long time more to go for gold. And yeah, miners, they suck now, but guys, if you have the good charts, you follow Kai, his channel, you'll be able to spot a good low risk, high reward. And that's another thing I want to touch up on. Even if Bitcoin goes to the moon from here, or the NASDAQ, it doesn't mean it was correct. Let's say on the sidelines, it doesn't mean it was correct to enter at this stage. Because if you take a ratio chart, you see, Jesus, the ratio is starting to show weakness in favor of precious metals, the low risk opportunities. And even if gold and silver, let's say silver crashes to 19, you're still closer to a bottom in precious metals and the miners, like generational opportunity in the miners right now versus their highs. They're not extended. They're not far away from the moving averages. Those miners, they're not 200% above a 3-year moving average. It's nowhere close to that. There's no fear of missing out on miners. They're getting kicked down. Like they're getting kicked while they're down. So it's super early for me there. It's an accumulation zone for the next years until this thing blows up.
Let's talk silver real quick as well. We talk gold and Bitcoin, but silver is always seen as the little brother of gold, right? Like the little stepchild nobody really likes. And then once it starts running, everybody loves silver. But for inflation hedges and everything else, like gold is obviously number one. But how's silver behaving right now? Is it behaving the way you expect it to be, or because it actually front ran gold by a day or two? when it ticked up the other day. So is that an indicator for you as well, or is it just a coincidence?
No, well, no. So for honest, it's so weird because it's really behaving as it's always behaved. Violent explosion, catch everybody off guard. I'm putting rocket chips on my charts, and that's usually the top guys. So be careful if I put the rocket chips on my silver. And then it just consolidates for 6 months, 8 months, a year, 2 years. This is like, and it just goes sideways, letting that 3-year moving average catch up. And then after that, out of nowhere, when everybody gives up on it, bam, it explodes. People buy in fear of missing out mode. But then the people that bought low, they're taking profits, and then it stagnates. If you're a new trader, it's the worst instrument to trade because it's super tough emotionally. You don't believe that it's bottom because it always tries, like it surprises you to the bottom. But as long as it's still above its 3-year moving average, which it is, I think the 3-year moving average is at like at $20 or $21 now. It's in a bull run, just like gold is above its 3-year moving average, and I think even now above its 1-year moving average. It's silver for me. It's like probably the best low risk, highest reward opportunity. I even did a chart showing the risk to reward. So let's say you bought silver here. This is not financial advice, guys, but let's say you bought silver at 22, or when I did this chart, and then your sell stop would be, I don't know, at 19. That's your risk. Let's say from 22 to 19, $3. But your gain is from 22 to at least all-time highs. That's like when gold did an all-time high, silver has always done an all-time high after. So $50, whatever. So that's your gain from 22 to $50. That's how much you risk to gain, and your loss, even if it goes down, let's say to 16, 17, the risk to reward, you won't find this any more time there. If you wait for silver at 30 or 40, where there's like at 30 where there's a real breakout, fine. But for early birds, this was the time, guys.
Interesting. All right, let's come back to that. One last commodity I want to touch on real quick is oil. And it's a market I don't follow too closely. I'm more focused precious metals, base metals, but I want to touch on oil because it has put in quite a bit of a run lately. What is that run A driven by, and B, do you see it continuing? Do you see the $100 per barrel falling again, or are we sort of plateauing right now?
Yeah, well, there's a reverse symmetry move for oil that there's a high volume node. I do some charts where I show where a lot of for price action, how many transactions there were, like in volume, you see that on the right scale, and about $100, $95, there's a huge congestion area right there. And there's a thin zone in between that. So it's a natural target to try to go all the way to that 95, 100. But I did another fractal work where I compared it, I think, to late 90s as gold dropped super low, like to $10, and then it rocketed up early 2000s. And we're kind of in that move right now. And it's possible right now that that oil is close to topping, even if maybe it goes up to 100. But then I'm imagining a sideways drift, and then let silver, gold, or like do their move. And once that's done, then probably after 2024, have oil do another crazy run. But that run is going to be another logarithmic move that it's previously done in the past, going from I don't know, like I said, $11 to 100. That's a logarithmic move. You add a zero, and that measure move would bring us to like 360 in 2023, in 2030 or late 2029, man. Yeah, above $300 oil, man.
Well, you'll have civil wars, seriously.
Well, will we? It's so weird because in 2000 it was at $17, and then in 2011 or 2008 it was over 130. There was no civil war there. They're just adding zeros. It's so weird. I know, because when we look, it's like our parents when let's say they saw silver at $3. Oh man, silver at $50 will be civil wars. But man, they're just adding zeros. If they wouldn't print anything, I would imagine, okay, now everything's tight and people will be fighting for it. But oh man, I don't know. It's like if it's just inflation. It's so sad. I guess for people who have fixed wages or fixed income, it really sucks, because their quality of living is going to drop. That's what's scary, man. If people aren't prepared for this, nothing's going to be affordable anymore. So yeah, maybe a civil war.
Yeah, well, it's like if you get $10 a gallon of gas, I'm sure somebody will revolt, at least in the States.
Jesus. They're revolting now in Europe. They had gas. Remember the Gilets jaunes thing in Europe there? Yeah. It's like even Quebec this summer, they're $1.80. We're going to have this summer, they're of gas. Like, Jesus. Yeah. My salary didn't double, How come gas is doubling? What's that about?
No, I'm waiting for my salary to double, actually. It's not happening. Oh, I wish it'd be nice. Patrick, great catching up with you. Just one last question, actually. Like,
Yeah.
what have you bought in the last 7 days? How have you traded? What have you bought? You don't have to mention like the tickers or anything, but how have you played this market right now?
I bought calls, guys, on silver calls. I'm levered to the gills. No, I'm kidding. Don't don't follow that.
To the moon, diamond hands.
I've been positioned a long time ago, and adding on weakness in the miners, especially silver. But I have silver, I have gold, I have oil plays, uranium. Like the whole all those sectors, all commodities, guys. If you're not sure, do a ratio chart versus U.S. equities, and you'll see the truth if you're cheap or expensive historically. And they could still go down, but the room is up, guys.
Yeah, fantastic. And I see you're doing quite well because you changed hoodies. I think you usually wear a gray one.
This one has no holes. Oh, it's starting.
Oh, it's from all the elbow rubbing on the desk, I guess, eh?
Horrible.
Fantastic. So you must be doing well. Patrick, it was great having you on. Everybody follow Patrick on Twitter at BadCharts1. Highly recommend it. And really appreciate your time. Thanks for running us through your thesis. Let's fingers crossed for gold 8,100 in 2027. Although it's, well, we can only go up from here, right? How much lower can we go? It's always, it's always interesting on the ratios. It's mind blowing. So I'm waiting for that breakout. I think gold wants to run. Looking at it, 1850.80 right now. So on gold. Do we need to confirm a breakout? Maybe last question in gold. What kind of level do we need to reach? I've read about 1860 this morning. Is that a level we need to get over, or is there a certain level where it just goes parabolic?
Well, I think, like I mentioned before, on the gold futures chart, on the point and figure, so that's an old school way of analyzing just pure price action. A while back, I think when we had the gold that had a close at 1825 or 1800, I can't remember exactly which number. I had a breakout on the point and figure chart for gold a while back. And right now it's just been fluctuating, back testing that breakout line when everybody's scared, looking on the daily charts. Oh no, it's not going to work. So for me, there's already charts breaking out for gold since a while back, guys. It's on my Twitter. I'll repost it or something. And I think like the point of recognition when the crowd really gets it, it's probably going to be at all-time highs. But yeah, you're right. There's that descending trend line there. Yeah, I think the level 1850, it's a round number. People will be looking at that. But we're above the inclining 200-day moving average. Everything's looking tip-top shape there for resolution upwards.
Fantastic. Patrick, thanks so much for joining us. Really, really appreciate it. And we'll catch up again very soon. Let's not wait this long again, eh?
No.
Okay, fantastic. All righty, everybody else, thanks for tuning in. SF Live, let me switch cameras right here so I can address you directly. SF Live episode 232, we were joined by Patrick Kareem. He's at BadCharts1 on Twitter. He also offers a masterclass teaching his technical analysis and what he's looking for, together with North Star charts, and definitely worth checking out. And we'll have him back on, discuss gold, silver, oil as well. We'll see in a couple months how whether we're still on track for $8,100 gold, obviously. And as I said before, this is all live. Make sure to follow us on YouTube, follow us on Twitter, and don't miss anything. Thanks so much for joining us.